Good morning. My name is Patrick Bratelius, and I'm an equity analyst here at ABG. And I cover Catella, who is up next to present. So without further ado, I'd like to hand over the mic to Kristoffer Abrahamsson, CEO, and Mattias Brodin, CFO of Catella. The floor is yours. Take it away.
Good morning, and thank you everyone for joining us today, this Wednesday. Like Patrick said, my name is Kristoffer Abrahamsson, I'm the CEO of Catella Group. Mattias Brodin, our CFO, and also Michel Fichier, our head of investor relations and communications. I will start by introducing the company, as I expect most of you want to know a little bit more about Catella, as we have become a lot more property focused over the last year. Following that, I will briefly touch on the third quarter results, which we issued on November 11th, and then we will open it up for Q&A. So Patrick, that's great. We're on page 2. So following a period of restructuring recently, Catella today is a property-focused company with 3 distinct business areas that also have significant synergies across the business areas and across our geographies. We have property investment management, where we manage 112 billion of external capital in fund and asset management structures. Our newest business area in the middle, principal investments, is where we deploy capital of our own balance sheet into property development projects with an IRR target of 20% on average. And sort of our oldest business, corporate finance, where we are a leading transaction and capital markets advisor present in the majority of the larger markets across Europe. Move to page 4. So go into property investment management is our biggest business area, where we continue to drive strong growth the last several years, and now, as I said, manage 112 billion. We work with a large and broad set of institutional long-term investors that's linking external capital with real estate investments. We have roughly 25 funds and various asset management mandates that cover a broad range of asset classes and geographies across Europe. Besides acquiring real estate into funds and management mandates, we are also an active manager of these assets and a developer of properties, where we yield strong risk-adjusted returns for our investors and partners, while also building up property development companies across Europe. So let's go to the next page. On page 5, so over the last 6 years, Property Investment Management, or PIM as we call it, has grown its assets under management AUM by an average of 23% annually. And during 2021, we've continued to deliver significant growth with a strengthening underlying profitability. PIM remains the main growth engine of Catella, and we have a clear strategic focus on raising new capital and launching new sustainability-focused funds, which can be seen in a very strong 6% quarterly growth in our fund platforms during the third quarter. During the third quarter, we exited a couple of low-margin mandates, and we also completed the sale of some successful asset management mandates in the UK, and thereby kept our AUM overall flat. But this is part of our efforts of driving margin expansion going forward, with still having a very, very strong capital pipeline. The growth of PIM has resulted in a healthy increase of fixed and variable fees since inception, and of course linked to the growth in asset. And this is how we really look at the growth of the value in property investment management over time, not on a quarter by quarter, but sustainable long-term growth of asset and income. The investors in our products are mainly European institutional investors, but during recent years we've seen an increased interest and inflow of institutional capital from other parts of the world. And this is something that we really seek to increase going forward. And I'd like to move to page 7, where we cover our newest business, principal investments. As I mentioned, with principal investments, we deploy our own capital into various development projects targeting an IRR of on average 20%. Currently, we have invested 800 million, essentially equity from our own balance sheet, into 11 projects in various asset classes across Europe. Go to page 8. We mainly deploy our capital through partnership structures, through our development partners, where other investors also have significant skin in the game. Being aligned with what we do with all our partners is a very important part of Catella's business. Essentially, our whole strategy is building up partnerships, partner companies, partner structures, whether it's in PIM or principal investments or corporate finance. Today, we invest our own capital mainly through three different strategies: development partnerships, co-investments with clients, essentially to open the door and have people get comfortable investing and opening up bigger mandates, and direct investments where we try to establish and grow local businesses. Besides targeting 20% IRR on our invested equity, principal investments also provide significant synergies for the rest of the group. It generates fees from development projects to property investment management. It can have potential investors that we can put these projects into our end funds as users. And of course, corporate finance is invited to try to win the mandate to sell and buy these properties. As a final point, in these structures, we're not in principal investments and investing through our equity for one-off gains. This is what we're trying to do, is build large development companies and partnerships to create long-term value for our shareholders by creating new platforms that generate future growth and even more synergies across Catella. We move on to page 9. Just a little bit of a highlight of what we have and what we continue to build across Europe. Over the last year, we have continued to invest, and we now have a diversified portfolio of asset classes and geographies across Europe. Now, we have invested 800 million of equity to date, but the total investment, what we have put into these projects here, the 11 projects, is a little over 3 billion. And these the projects that you see here on the page will have a total development cost of 8 billion Swedish over the life of these projects. So even though our equity position today is well, it's not small by our standards, but it's worth pointing out that the pipeline is pretty long and pretty substantial when we look at what we continue to invest on our balance sheet. Most of these projects come through our development partners. Catella Project Management, based out of Düsseldorf in Germany. Catella Logistics Europe, pan-European logistics developer based out of Paris. And InfraHubs, also logistics, but here in Sweden. And in several of these, we have material management fees coming from the total investment, not just our own equity portion. On the map, we are now in 5 countries and continue to expand. And we have logistics, residential, mixed use, and office properties, where our ownership share ranges from 40 up to, in some cases, 100%, although that is not our core strategy. This partnership and portfolio mirrors really where we look at real estate investing on a macro position, where we believe value is and will be generated in the coming years. And we feel very positive about several of these assets coming to market, into a very strong market in 2022. Let's move on to page 11, where we touch on corporate finance. Catella Corporate Finance is a leading advisor of pan-European real estate advisory, brokerage, and other capital markets transactions. We have over 200 colleagues across Europe, and a target of being in the top 5 market position in each of the main markets that we operate in. Main business line has been and continues to be brokerage, although we have in recent years, and most notably in the last 2 years, been able to successfully expand into higher margin segments such as debt and capital markets advisory and slightly bigger transactions, which we think is really, really important for the future increased profitability of corporate finance. On page 12, on corporate finance, we had listed the items that we really think, the traits that are appreciated by our clients across Europe. Among others, we have very, very strong local know-how and intelligence, but we also have pan-European presence, intelligence, and research, which is not only a differentiator to our customers, but it's also very important for our other Catella businesses as a market connector and door opener. We have a long history in many of these markets, over 20 years in several of these countries, and a broad offering when assisting our clients in real estate transactions. As we mentioned earlier, corporate finance also adds significant value to the group as a whole. And a differentiating factor is that we can now offer co-investments, new transactions, and also develop partnerships, which we have begun doing more and more in corporate finance to develop more recurring revenues, which we think is important for the value of this company. Let's go to page 14 with some brief highlights from the third quarter report that we released a few weeks ago. From a group perspective, we continue to deliver strong underlying growth and very solid financial performance. As a management team, we're really focused on pan-European growth and capital raising, which has been a bit more local in the past, along with digitalization and talent diversity as this is a key success factor going into the coming years as we modernize Catella a little bit more. Property investment management continued its strong track record of organic growth, with inflows of roughly 6 billion in the third quarter alone. The inflow in sustainable funds is very, very strong, with institutional capital committing 3 billion in this quarter alone into our new residential funds, classified as dark green or category 9 fund, which we're immensely proud of. And we have another fund coming into market which is solely focused on energy positive residential buildings, another step forward into this very important sector. Also, after the end of Q3, our UK platform, Catella APAM, was selected for significant mandate from the Greater Manchester Pension Fund, which again is a strong step forward and another proof of our ability now to attract and work with even the largest institutional players in the market. We have significant committed capital and a very strong pipeline. Principal investment invested about 100 million in the third quarter. As I mentioned, we're at 800 million of equity, 3 billion total invested, and a very, very strong long-term pipeline. The Improb's property in Norrköping, which is our largest logistics property, is on the market with significant investor interest, and we should close that transaction in the first quarter of next year, hopefully at a pretty good level. Corporate finance delivered a decent quarter. Third quarter is often a little slow between the summer core transactions and the rush for year end. But it was still a solid quarter, and we continue to show strength in large M&A transactions and debt advisory, while the pipeline and frankly activity to date in the fourth quarter has been pretty strong. Go to page 15. Now, before we go into the overall financial results, I want to set the stage to make it a little easier to compare. Principal investments has not been a recurring profit generator in the past. So in the 2020, in the third quarter, we realized almost 230 million of EBIT from the sale of one property. So would set the stage of backing that out and showing sort of the underlying profitability. Last year, you can see that going from 26 to 48 without that in EBIT, it shows very strong underlying growth. I think it's important then to mention that principal investments, these are big ticket items, but we're now building up a portfolio so that maybe not at this size every time, but a portfolio of future profit generation that this will become the norm, and we will no longer have to normalize for single transactions like this. But Q3 last year was very exceptional, but the underlying growth, driven from the growth in AUM, primarily in PIM, and increased profitability and profit margins, has driven our underlying EBIT up by some 85% year over year in the third quarter. Go into page 16, which is the key financial highlights, which is adjusted for discontinued and divested operations. I mentioned earlier we've exited Catella mutual funds, Catella Bank, and also our hedge fund business, IPM. So we are now a property-focused business where we focus on long-term core growth and an increasing portfolio of equity investments. We delivered solid performance, revenue of 375 million and operating profit of 48 million with a margin of 13%. That's third quarter is never one of our strongest, and I think what we look at here is just the underlying growth. We never look at quarters really. We look at what we can do on a long sort of trailing 12 months and what we have in the pipeline going forward. PIM continued, like I said, to have significant inflow into our fund platforms, with close to 6 billion in the quarter. We now are, as mentioned, at 112 billion of assets under management. Pipeline is strong, and we continue to build a broad portfolio of funds and mandates with stronger and higher underlying profit margins. Principal investments, we invested about 100 million, primarily to continue to develop our logistics portfolio. And we had a couple of small gains in the quarter, and I think in the Q4 will be similar, limited activity, but a very, very strong pipeline of exits spread out during 2022. That's going to take a lot of replenishing and the need to invest more, but we feel very, very good about the pipeline of investment opportunities that we have coming, that we're working on actively. And now, obviously, I said Norrköping is next in line to be sold. Corporate finance, a relatively slow market, as it is normally in Q3, but we have a solid pipeline. We have I would say rather good M&A activity that we're working on. We have good progress in debt advisory, which we're looking to expand even more across Europe. And what we have is also an underlying strong recurring revenue in residential advisory, which I think is a good baseline for corporate finance revenues going into the future. So let's wrap it up on page 17. So some highlights. Property investment management, we show the ability to continue to grow organically, with strong inflows to our funds, more focus on sustainable products. We have, at the end of the third quarter, about 15 billion of uninvested capital, which will be deployed in the coming months, setting the stage for what we believe to be a strong 2022. Principal Investments continues to invest in regions and asset classes that we believe has the strongest tailwind at the moment and where we should deploy our capital. Some harvesting coming definitely for 2022, but the investment pipeline, I would say, is just as strong as the exit, if not stronger. And in corporate finance, we have a strong underlying, long-standing businesses in several countries, and a move into even higher margin businesses into 2022. Strategic transformation is going well. We are now a pure property player, which we can focus on both with capital and resources to really drive our current business areas. And we are really accelerating the sustainability agenda, both at a corporate level and by specific investments and fund products, which is really, really important for the future of this company. Expansion into new market. We are exploring opportunities to enter Poland with another very established development partner. We're looking into making our first investments in this region. And as a final point, as I mentioned, our outlook, I think, is very strong, both from a profit generation perspective, but even more importantly, capital inflow and investment pipeline opportunities. And with that, I would like to thank you for your time today, and we will now move into Q&A moderated by Patrick.
Great. Thank you, Christopher. Great presentation.
Thank you.
Well, yeah, then I would like to ask some question. And let's start off by the property investment management. As you showed there on one of the slides, you have grown the AUM very strongly the last couple of years. Can you talk a little bit about the driving forces for continued growth the coming years? What are we expect to see here? What will drive the growth?
Well, Patrick, I think most importantly, you can only really grow assets under management by performance. If you're not performing, if you're not delivering returns to your investors, it's hard. Luckily, or with some scale, I think, we have developed products and built up an asset base with very, very solid returns. We have old funds and we have new funds that are all, ranked pretty highly, both in regulated German funds and non-regulated Luxembourg funds. That's fueling our performance. And as I said, we have 15 billion of already uninvested, unlevered equity waiting to be deployed. So I think we have a really good starting place to grow even more. The funds that are coming in today predominantly are seeking either pure sustainability-focused assets where we think we're very, very well positioned. We launched our first sustainability fund back in 2011, and we now have dark green funds and moving into energy positive funds, which I think is very, very attractive for the institutional capital. And secondly, I think we're well positioned in residential, pan-European logistics, but also in very core commercial assets. There's a flight to prime definitely today, and that's where we're really, really strong, particularly with German investors. So a broad range and a shift towards even more progressive investments, I think, is, and as I mentioned earlier, broadening the institutional demand to a more global focus, I think could accelerate it even further.
Okay, great. Thank you. If we look at the profit margin in this segment, property investment management, it has come up the last couple of years. Can you talk about what are the drivers here going forward in order to see continued margin expansion, or are you seeing any fee pressure in your operations?
Well, there's always, I think, fee pressure. The key here for us is scale, economies of scale, and pan-European efficiency. When we look at profitability, we have a lot of funds, a lot of asset management companies, but we only have one group level. So the order for us to grow and double in size in not that many years, while maintaining the same sort of pan-European and headquarter infrastructure, that naturally brings economies of scale and higher profit margins. But there's no way we can deliver that without focusing on more effective capital raising and digitalization of processes and data. We have to be, and we're working very actively on becoming more efficient in our processes, sharing back offices, sharing data, and go into market in a streamlined way. But again, it's a business of scale, and the more assets that we can get in, which we have a really good position today, and the margins will go up. From a fee perspective, I think we're trying to become more engaged with our investors to create more creative and progressive fee structures where fixed fees are still solid, but with yields at relatively low levels, we have to be creative in the way that we share upsides with our investors on a long-term basis. So on a quarter by quarter, sometimes you have a big exit, sometimes you have a big performance fee, but on an underlying basis, it's really driving strong underlying performance with good assets. That's the key. And then really about pan-European cost efficiency.
Okay, great. We are unfortunately out of time now, so we have to stop there. I'd like to thank Christopher, Matthias, and Michel for the presentation, and speak to you soon.
Thank you very much, Patrick. Thank you, everyone, for listening. Thank you.